Good morning, folks. Welcome to another episode of the Daily Read with Jeff Kikel here on Exit Rich, Retire Free. And today is Wednesday, August 19th, 2026. A bit of a crazy week so far, and I actually missed doing the show yesterday just because it was so crazy that I was having to make some adjustments for client accounts at the time. What a difference. Yesterday, if you were in any kind of AI stock, it was just a bloodbath, especially for the memory stocks and things like that. So, where are we at today? Where did the money go? For 2 days, all anyone could talk about was the AI trade getting hammered. Chip stocks were down double digits, the NASDAQ sliding. But here's what got missed in all that noise: the money that left those names didn't leave the market. It didn't go to cash, didn't sit on the sidelines, it rotated. And where it went tells tells you the almost everything you need to know. So with Regime Lab, what it's showing is the market doing two things at once. On the surface, a bounce, stocks up a little today, even after two rough sessions. But underneath is a powerful rotation. Money is fleeing the AI crowd, the AI and chip names, and pouring into two very different places: healthcare and energy. And the emblem of the whole day, a cancer vaccine. Moderna and Merck reported a genuine breakthrough in late stage melanoma trials, and Moderna's stock rocketed up 90%. So while the hype trade was getting repriced lower, a real medical advance in a boring sector minted a fortune in a single morning. So why this matters more than the daily up and down. In a sell-off, the amateur watches what's falling and panics. The professional watches where the money is going, because money rarely just disappears. It rotates from the crowded trade to the next one. And the direction of that rotation tells you what the market is actually worried about. Today, money fled the expensive, rate-sensitive AI names, the ones that get hurt most when yields rise, and ran towards cash flowing defensive corners, healthcare, and energy, which people need in any economy. And that energy also benefits from the very inflation pushing yields up. It's not a random shuffle. That's the market quietly repositioning itself for a world where interest rates stay higher for longer. So, what do we get? What's the lesson from this? Two things. First, don't confuse a rotation with a collapse. The market isn't falling apart, it's changing leadership. And that's a normal, healthy, if uncomfortable process. Second, notice the theme underneath. Today's winners were companies with real earnings and real staying power, not the ones running on future promise. When the cost of money goes up, the market stops paying for dreams and starts paying for cash flow. So the question worth asking is simple. Which kind of stock do you want to own? So two tells. Today's bounce came from the footnote. The Treasury itself stepped in to calm the bond market, buying back longer term bonds to nudge yields down. That's a patch, not a cure. Very much like we saw with the yen carry trade when the US and Japan stepped in to prop up the yen. We'll go back to that in a few days because I want to cover that again. And we've seen that go back down. Once again, this is a patch, not a cure. So we got to watch where yields stay if they stay calm on their own. And the big one at 2 p.m. today, the Fed releases minutes from its last meeting, the one where three officials wanted to raise rates. And those minutes, if those minutes read hawkish, the fragile bounce gets tested in a hurry. So just a quick run through of the summary. Today's thesis was where the money went. Confidence is medium. We're still trying to figure out which direction the market's going to go. And this week we've seen a lot of back and forth. Risk level is significantly elevated. So it's one of those places that you want to be very careful putting money to work right now. What we're watching, 2 p.m. Fed minutes and whether yields hold without any help. I don't think there's anything big surprises in there, and I don't really put a whole lot of credence on this Fed minutes release, but we get an eye into what the Fed's thinking. The bottom line is a rotation, not a collapse. When money gets pricey, the market pays for cash flow, not dreams. So that's your daily read for today. I'm Jeff Kikel with Exit Rich, Retire Free. As always, this is for education and not investment advice. But if you'd like to talk through your plan, you know where to find me. So thanks a lot, and we will see you guys back here the very next time.